Give me 1 second. That volume's up. That volume's up. Okay, so what we're going to do today, welcome to Mortgage Protection Mastery. Today we are going to review some simple ways to start making some big money if you're new and you do have leads coming in on a regular weekly basis. You will take these strategies and it will work the very first day and week that you're in the field. So, but I can't really help anybody unless they do have a steady lead flow. So I'm going to go over that real quick and get that out of the way. You know, if you're ordering 10 leads, you got 40 shots in 30 days to hit whatever your goal is. Have you questioned yourself about what the number is that you want to receive every month? Because this is important. So if this is the number that you want to receive every month as a beginner off of the 10 lead week order, then go ahead and do it. I'm not saying that that's going to be it, but you know, to guarantee you a $10,000 a month, that's hard on that style of marketing. I mean, it really is. So to jump this to 20 is where everybody should be. And I know when you get into this market, this industry, that nobody tells you, hey, you should have money when you start in this industry, because that's what you definitely need to get into this industry, is a little bit of cash to get started. And everybody just wants to recruit you and not tell you the truth. So at the end of the day, this number between this and this weekly are going to be what design a 10 and 20K week or month. It's either 10 a week or 10 a month. I mean, that comes down to skills. It comes down to leads, but then it comes down to skills. Somebody like me with 10 leads a week is going to have a better opportunity at 10,000 a week than somebody new, obviously. So, and that's just due to training on the products. So I want to review the products that I don't have any favorites, guys. So I'm not a favorite guy. I'm just inside the house finding out what health and age are there. And then I'm creating the need for them. So we'll go over designing that need too. So if you have any questions on the webinar, just speak up. If you're live on the social media, you got to type it in unless you go to the webinar, which is on my Facebook link. And then you can interact with me. And having those questions, guys, really helps me help whatever's going on in your head, whatever you may be wondering, then I can interact with you and get that taken care of. So we have our 20 leads and we're starting to make our dials. This is a great way to track your business, guys, is to see how many leads I have, to how many dials I made, to how many talk tos, to how many sets, to how many sits, to how many sales, how many referrals. And when I can track that from you, and I do have a sheet to track this, so when you have your leads, you have your dials, and a dial session, by the way, isn't having 10 leads, or it's not having 100 leads and dialing through them one time. You can have 100 leads and you can dial them 200 times. The best salesmen in the world dial the phone 200 times a day. The best in the world. Those are 7-figure earners. So usually stockbrokers that are dialing the phones 200 times plus a day to get their results. So when you have 100 leads, if, let's say most of you new people have 40 leads, and you dial through it once, did you change the phone number? Did you star 67 that number? Because it wants to hide the number. Did you change up the phone numbers? There's ways that you can use social things like Google Voice or some shit like that, and you can get a different telephone number. Sam Chan has a way to do that. Maybe he'll post it if he's on here on how to change up your phone number for free. So make sure you're dialing a lot. So you have your sets and you have your appointments now. And let's say you have 10 appointments. You order 20 leads, you set 20, but is that script any good? I would think so if you're getting 10 appointments out of that 20. Now you want to raise that number to close to 15 to 20. And when you get really good on the phone, you will get closer to 20. Remember, those people filled this out. If it's direct mail, they filled it out. So your best opportunity is in direct mail, by all means. And by the end of the day, if you have teleleads to get started with, if you're waiting for your direct mail leads to come in, get your telelead flow going. All marketing matters, all of it. It all matters. So get your marketing in. So you have these 10 appointments. That script is pretty simple too. I mean, Mr. Jones, my name is Jason. I'm contacting you. You had requested some information on final expense insurance, and I'm the rep in that area. I'll be in that area tomorrow at 2 p.m. Can you and Mrs. Jones be there? Yes. Okay, great. I'm going to need you to grab a pen. Mr. Jones, I just want to confirm a few things. And you can get good at this too and know what you're walking into. You can confirm, are they a smoker? Have they had any heart issues, cancer in the past 4 years or ever? Are they a diabetic? And then you can know what the hell you're walking into. So when you get good on the phone, you can pre-qualify them right over the phone. That's how I walk into homes, especially with mortgage protection, with a smart UL already created for them. I might have to create several smart ULs, like a $50,000. I start at 25, I'll do the halfway point, and then I'll do a whole one. So I might have 3, but what I'm able to do is show them the cash illustrations inside these things and able to make my sales based upon what they're saving. So I don't sell on death, I sell on living benefits. I sell on member benefits. I sell on cash value interest earnings. And who the hell wants to, not a lot of people care what they want to know what they're getting while they're alive. If you could sell on what people receive while they're alive, you're going to make a lot more money in this industry than selling on death. So yes, the death part is great for the significant other, but that doesn't have any value for the living survivor. So that means that each policy is valued for 2 people, is what it means. That means if you have one policy Any cash value earning or ROP, return of premium policy can work this way. You have the living benefits, which benefits two people. Living benefits benefits one person and two people, because when he's alive, if God forbid he gets cancer, heart attack, or stroke, or if he can't walk, talk, bathe, eat, dress, toilet, transfer himself around, or drive a car, then he gets that money while he's alive too, and that benefits her while he's alive. So also the member benefits benefit both people. The cash value can benefit him if she's no longer around. If Mrs. Jones dies, he just cashes the policy in. This is so simple, but it's very strong in the house. It's so strong. It's so powerful to know, okay, so if she dies, I still have money. This is great. When you look at that and say, wow, okay, so basically it's a savings account. I'll get people at the table saying, so basically it's a savings account. As soon as I hear those words from them, I'm like, shit, this is done. And then, oh, it's not just a savings account, Mrs. Jones. It's a savings account with interest compounding on it. So the money grows. You know, even if you're at the standard whole life products, final expense, you got 3% interest growing on the cash value. Yes, not all of it goes towards the cash value. They got to rent the death benefit too. Okay? But on the side, in whole life too, not a lot of you are talking about the one living benefit that they usually come with, which is if they have 12 months to live, they will get the money while they're still alive. And if they outlive the 12 months, they don't owe it back, which is a great thing to talk about inside the house for final expense. Because the number one thing you want to bring to the table in this industry is value. I used to sell on death only. That was all I knew. Nobody trained me on value. Nobody said, hey, Jay, you realize this thing's earning cash value. No, I get it, but I didn't know how to use it in the home. So when I have value is the living benefits to the member benefits that can benefit more than just them in some member benefits. It has, I mean, for God's sakes, they have college scholarships in there. They got legal advice. They got financial advice. They have community benefits. They have there's just a lot. Read over them. I don't have a list in front of me, but there's a list of them. And if you can, just call the carrier about the member benefits, basically for royal neighbors and foresters, and find out about those. And number 3, there's interest earned on cash value, which hence then, what does that turn into at the end? Let's say that somebody has a policy for 20 years. Because my average premiums are $300 to $500 per sit. That this is cash inside. There's big money in there. So over the years, it's compounding. You have 20 years times 500, $6,000 a year. Boom, 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 boom. And you got 120,000 into it, and then maybe there's 80 grand in cash value or something. Maybe there's 120 grand with the right compounding interest. There might be 120 grand or more. If you do something like that with a fidelity guarantee in life, once you get past the first 10 years, whatever you stuffed in there is almost double. So if they stuffed 120 in there, the actual cash value look on that would be more like $240,000 in cash. So, and that's called an increasing death benefit too on that. So we'll go over that later. But long story short is you're able to share with them a way to put away for the future. Now, if somebody pays off their house or in final expense too, because people have mortgages and you guys are selling death and cremation, I get it, but or to buy somebody time or whatever you buy, selling them on, the cash value portion can be used to pay the house off on the back end. So, let's say they build up enough cash flow and they've been paying their house off for 15 years, and they get this policy and they have this policy for another 10, and they just, whatever, they don't want it anymore. And there's only 5 years left on the house. They can use that to pay off the back end of the house, the cash value. I'm going to tell you right now that the biggest sales you will ever make are based upon replacing other products. The biggest numbers you will give is replacing products. And the reason is because one, they believe in the products already. So they've had them for 20 years, they've had them for 10 years, they believe in the product. So that's a great thing for you. When you replace a product or products, you're usually looking for term to replace. Why? Because they're probably going to outlive it. They had it 20 years, 20-year term, 30-year term. There are some 40-year terms out there, but long story short, you get a term product that's 20 years and they only got 10 on it, but now they have a mortgage for 30 years. That's no good. I have insurance. How much is it worth? It's worth $100,000. Okay, well, when's that term out? Some of them will say it doesn't. And you're to say, Mr. and Mrs. Jones, anything, say it twice, over $40,000 is considered term or what they call an index universal life. So those two products will tap out eventually on you. The index universal life sold many years ago by whoever sold them never ever compound enough interest or are overfunded enough or funded properly to make it these days. So it's very important that you understand that anything above 40 grand is going to be term or index universal life. And right from there, you could start explaining their product to them. Now, they may pull the product out and you may be able to ask, do you have the copy of the policy? At this point, you better have gone over a few things to build rapport to the point of trust between you two, but also build rapport to the point of trust to a point of them trusting you with products and knowing that you're the guy that knows this shit. Because they're not going to pull it out. So at the end of this day, when you know you got trust when people go ahead, yeah, I'll go grab it. You know, that's a great sit. So you go out and they get the product. If they don't get the product, you're going to figure it out yourself. Okay, you got $100,000. How much is the premium? What's the premium on? It's $100 a month. The reason that's beautiful too is because that's what you're going to use for your product. So you already have a $100 sale. Now all you have to do is upgrade that. You're there for a reason. They obviously knew bringing you in there that they're going to spend more money. Okay, so don't let them fool you that they don't have the money. Now, obviously if it's term, there's no cash value, but if it's an IUL, you can explain that there's cash accumulation in there. Let me do this over here. If it's an IUL, you can explain that there's cash inside it. And inside that cash is where they get their, is where they're pulling money out, Mr. and Mrs. Jones. They're taking from your cash bucket, your cash value bucket, to pay for the cost of insurance, COI. The cost of insurance on that product is on the rise. So today, if you've had it 20 years, my bet would be that it's $100 a month to 200. That means if it's over 10 years or 20 years, it's usually 100 to 200 bucks is the cost of insurance. Where are they getting that money? Well, they're getting it from the cash value portion. That cash value, this is so important for you to replace these policies, I can't even tell you. Because if you just go in there selling another product on top of the products that they already have, you're going to lose a ton of money. This is very valuable to you. So when you replace this and you teach them about the cost of insurance on here and let them know, let's say there's $3,000 in cash value. Mr. and Mrs. Jones, do you know where your cash value is inside this? Do you have any idea where the cash value may be inside this product? No, we do not. Okay, let's say it's $3,000. Let's say the cost of insurance is $200 a month. Well, that would mean that you got like what, 2 years left on it, because the cost of insurance goes up every year by usually 10 or 20 bucks. So you have to keep that in mind too. It's very important to keep that in mind, that the cost of insurance goes up by 10 bucks or 20 bucks a year. Hence the policy not having much time on it, okay? You're going to use this as a way to get into their minds to teach them about this product. And the very, 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 very best thing you can do is get the carrier on the phone to prove it. You want to use the carriers of the existing policies and the existing carriers, their products, to have them on the phone. Don't worry, you're right, okay? Just get them on the phone and say, you ask, what's the premium? What's the cash value? What's the cost of insurance? And ask what's the increase on cost of insurance, but they're not going to be able to tell you. What they will tell you is what the cost of insurance was last year, okay? So if you take the year before, let's say it's 2018 you went back to, and the cost of insurance was $95, and in 2019, the cost of insurance is $105, you know it's going up by 10 bucks. Now they're going to tell you that fluctuates this and that. They just say it's standard. I've never seen it fluctuate too much. So it's 10 bucks a year, this thing's going up. So in another 10 years, that's another $100 that's coming out of the cash value. They can't afford it, guys. It's bottom. It's just going to chew it away. So at the end of the day, this product's gone. How many years do they have? They don't. It depends on how much is in the cash value. So how you evaluate that is based on what's in the cash value bucket. So if they say there's $5,000, there's what I say to Mr. John. You can either have this money or you can give it to them. And guess what? They don't just lose $5,000 plus it increases by 10 bucks a year. They also lose the premium that they're stuffing in for the next 5 years. So if that's $1,200 a year times 5, what is that, like $6,000 or something in 5 years that they'll lose. So total loss is $11,000. I hope you got this. If you don't, just ask. Premiums plus cost of insurance costs will come to $11,000 on that particular situation. And it's so valuable for you to protect. Now, you're not just doing this for a sale. You're doing this to really, truly protect somebody from the loss of a product in just 5 years, even less. It'll be less because, because the cost of insurance is going up. So long story short, replacing policies, not just replacing policies, but replacing indexed annuities too from other indexed annuities. Do you know that there's annuities out there worth 1.7%, 3%, 2%? Who the hell wants to be a part of that these days, So explaining this, I use annuities as mortgage protection. That's why I sell so many annuities, because I'm using them for MP or FE. If you're a final expense sales rep, you can use annuities to replace final expense. And you'll be very satisfied with the results through the illustration. Mr. Jones, you got 100 grand. How would you like to have $200,000 in the 8th or 9th year? That'd be great, huh? You double your money. At this rate, if you stay where you're at 1.7%, in 10 years, you'll be about 115,000, 120,000. So this way doesn't come out of your pocket, Mr. or Mrs. Jones. However, if they want to leave more, you can use the annuity, the interest earned from the annuity, to sell a policy. So the income from this can now fund the policy for free. And some people, if their age and health are right, can actually get a very giant policy with this thing funding it for the rest of their life. And you make a big sale. Not only do you make this sale, but you make that sale too, and that's a $10,000 sale, easily. So that's where you can have this is easily where you can have your $100,000 a week or month. It's out there. Trust me, it's there. I know that's a lot of money, but you're only limited by your beliefs and your actions and your wisdom. So if you don't believe me, then don't believe me. Stay broke. Or stay at $10,000 a month. I'm telling you it's there. I'm not lying to you. I'm telling you it's out there. So you just got to use these strategies, though, to get to the point of convincing them that this is the right thing to do, to allowing them to trust you, to allowing them to come to a realization that if they don't do it, this is important, if they don't do it, where they're going to end up. If you don't do it, you're going to be at zero, okay? And what do you have? You got $150,000 on a mortgage to be paid at that point where you lose the policy. You can find out what the mortgage costs. Well, how much should be in the mortgage? Let's say it's $1,000 a month on the mortgage times 12 equals $12,000 a year. Times that by, let's say this product is at 10 years. The index universal life you found out will last for 10 years because of the cash value. This is $120,000. That's without interest compounding on it. And then you divide that by 2, that equals 60 grand. plus just add like 3% interest, which is 30% interest over a 10-year period, and add that to this. So let's say it's 80,000 bucks or something. I don't know what it is, but so $80,000 off of the original price. So let's say this is 230,000 bucks. All I'm saying is in 10 years they'll still owe 150,000 bucks, and they won't have a policy. So what I'm doing is I'm teaching them every step of the way, like a financial advisor would. I'm literally becoming that inside the home, because there's such large numbers at risk for them and for me as the salesman. So this is how you get big numbers, guys. You've got to train these people on literally everything. You know, you can be who you want to be. If your demographics are right, you got idiot young people, using ROP term isn't a problem. You know, but remember, everybody has to be under the age of 50 to do it. It's very hard to do, you know. Some states don't have living benefits. If you have living benefits, great, but, you know, use them. Living benefits are a powerful thing to use. Cancer, heart attack, stroke, walk, talk, bathe, eat, dress, toilet, transfer yourself around, driving a car, even add one in. So the return of premium term is a great product to use on the younger people, plus it pays you better. So if you want to get paid big numbers, you can use the ROP term to get some big numbers on some policies for yourself. 9 times out of 10, especially you people in the retirement market, in your demographics, you're going to be well over this. My demographics are 60 plus. So that's why I am forced to use Index Universal Lives or the Smart UL or the GUL from Mutual Vermont. Those three particular products is what I use most. And the cost of insurance doesn't matter in this situation because they're going to die before it even matters anyway. Plus, I have them funded so damn high that they're never going to wear out anyway. And the interest rates are pretty good. You know what I mean? You've got Foresters between 4 and 6% interest annually. And F&G is 8.7 to 9.7% annually. And then you got your average market, which is about 3%. So with the right funding, these policies will stay in place. You don't have to worry about them. GUL is 3%. That's one of the reasons I don't use that. And I'll tell you what, sometimes the GUL is cheaper than the Foresters. But for those of you selling on just the death benefit and price, that's where you lose. So I can get bigger numbers out of people teaching them it's better to get higher interest rates and more living benefits and member benefits for your family. Young people with Foresters, well, even if they're older, and God forbid that they both were taken out of the picture, and let's say they have 3 kids, Foresters will pay them $900 a month for each kid per child a month, plus that death benefit until they're age 18. So let's say these kids are 10, 12, and 14 years of age. That's a long ride to have that much money coming to help out the family. That's huge. That's enormous for this family. So these living benefits, that's why do you think I'm so enforceable on the product knowledge, that I'm pounding it into all of you to just take the products and consume them. Call the carriers daily. Until you get it down, I want you bombarding the carriers. Go into the carriers' back offices and watch the videos. You can go to YouTube and watch the videos. They're there too. Foresters has a YouTube page. Mutual Vermont has a YouTube page. They all have a YouTube page. This Royal Neighbors thing, I didn't know about them for the longest time, and everybody was telling me to start using them. And now that I realize how liberal they are, this is a great product for newbies. It's an easier app to sell. It's I don't want to say it's an easier app. They're all pretty easy, but it's a lot more liberal. And the difference is these are a lot of hard issues can be taken by this company here versus Mutual Vermont also. I think with American Amicable, we don't use much. I know a guy that uses their term product, and it's basically all he uses, but he makes 400 grand a year doing it. that particular product is good for like military guys I run into with that, what's the hell's that issue called that they have with the head? Post-traumatic. So if anybody's on pills for any mental issues, American Amicable will give them a level product. Most companies don't. If they're bipolar, schizophrenia, things like that, then you can get American Amicable to give them a level-based product, not graded, okay? So it's good news there. Remember, you have your Transamerica for COPD level. You know, if you don't have it, you can still sell a graded product. Let's talk about selling graded products, by the way, because a lot of you might be like in fear of doing that. And I tell them to go to hell with that. Don't talk to me, Mr. and Mrs. Jones, about not wanting a product that saves you money plus gives you 10% in the first 2 years. So if he dies on the 23rd year and you're at $23,000 plus, well, let's see. If there's, you know what, I sell graded products at high premiums too. I will have $500 a month premiums on graded products. Why? Because it's all they have. That's it, man. This is the last choice. You don't do this, you're going to wish to God you could come 6 feet out of the ground, dig a hole, come out and redo this policy with me. Because she's going to be left with zero. And you need to put the effects of what this woman will be living with. She has a house to pay for. She's got a car to pay for. That's an ugly car, but that's a car. She's got a car to pay for. She's got medication to pay for. She's got a light bill to pay for. She's got the rest of her life to pay for. And you have left her with what? What did he leave her with is the question. Okay? You need to know exactly what's left behind. Now, what is it? Let's review what we talked about inside the house. What you're trying to investigate like Columbo. One, you really want to know is their life insurance. Do they have life insurance? Two, do they have a pension, 401k, any stock-based products or annuities? Anything that will be left behind to Mrs. Jones. What else is left? My words are, Mr. Jones, you have life insurance. Now, do you have anything else that Mrs. Jones would receive, like a pension or 401k? Yes. This is where you find your annuity sales, guys. Yes, I do. Okay, so what is that? It's a 401k. Okay, how much will she inherit from that? What's her inheritance from that? I don't say what's it worth. I say what's her inheritance from it. It shows that I care about her more than his money. So, and they don't know that I sell annuities, okay? But people don't like sometimes when you pry into their personal business, all right? It can hurt them. And never ever make anybody feel that they did the wrong thing by using a 401k. I learned the hard way of examining people the way they react to what I say to them in reference to their 401ks or their stock-based products when they say, oh, you could have had an indexed annuity for the past 20 years and doubled your money every 10 years instead of losing money in the stock market. Don't do that to them. Just tell them they did a great job, but it's time to evolve with the times. And if you don't, you're going to hurt her. I always say her. You're okay, Mr. Jones, because 9 times out of 10, he has a bigger income. Very important question. What's the Social Security income that she'll receive, Mr. Jones? Sometimes they'll say, I don't know. Sometimes they'll say it's hers. Sometimes they'll say $1,200 a month because they know what theirs is. So let's say it's $1,500 a month. 9 times out of 10, it could be easily $1,500 a month. I think the average is about in between $1,000 and $1,500. But these are the averages. Now that's what she's going to receive. But guess what? Here's the selling point. The selling point is the fact that it takes 6 to 12 months to get there. That's the worst case scenario, guys. That she has to wait 6 to 12 months. What is she waiting on is the question now. So if we go back to her, we want to say, Mr. Jones, just so I understand what you're going to be waiting to receive his Social Security, what are you waiting on means what is your Social Security income? Mrs. Jones, Social Security income $790 a month. 790 to 1,000 bucks is usually average for a woman these days. So 700 to 1,000 bucks. So she has 1,000 bucks a month. And what's the mortgage payment? How much is the mortgage? Mortgage payment is 1,250 bucks a month. So you're still down 250 bucks a month, Mrs. Jones. So if we don't do something, you're going to get hurt real bad. Remember, we're talking about a graded product here. So now they see it. So you're telling me, Mr. Jones, that you think that there's a possibility you may, will you be around? First of all, I would say you're going to be around in 2 years, right? You're not going anywhere. Oh, we never know. But the likelihood is you're going to be here. Your health is, rough, but they're just evaluating you on past. It could be a prescription drug, guys. Doesn't necessarily mean that everybody's going into the ground in the next 2 years. They've been living this way sometimes for 20 years, but those insurance companies look at it like, they're not taking a chance. So at the end of the day, they get this graded product, which what? Now let's go value on the product. What does the product do still? It still earns cash value. So if she dies, you still get cash, Mr. Jones. If Mrs. Jones passes away, you're still inheriting money, it just works for both of you. One policy for 2 people is great at your age. You know what I mean? So you guys don't have to worry about buying 2. So later on, let's say God forbid that Mrs. Jones goes in 2 years or something. Let's say it's let's say it's on the 23rd month. And let's say that you're paying $100 a month, it's $1,200. It's $2,300 plus 10%. That'll take care of her cremation. Mr. Jones, you want cremation, right? Is that okay? Yeah, cremation. That's good for a cremation. Now, if God forbid that you pass away, she gets the same thing. It's also good for your cremation. See, the bottom line is, at least we're getting rid of some debt. We might not be, or it buys her enough time to sell the house. Screw the cremation. We'll let them handle it. We'll bill you out for that. But it buys you enough time to get out of this house. So you got 2 months to leave the house with the equity. So you got to know what the equity is, guys. Because that's value. That's value that they don't want to walk away from. Equity. Let's talk about that. That's a graded product sale. Equity is the most valuable tool you have in the house, because 9 times out of 10, I ask Mrs. Jones, Mr. Jones wasn't here anymore, would you stay in this house? You sometimes look around the size of the home, it's like, holy shit, what are they going to do? If you're up north, we're going to walk up and down the steps at 80 years old? No. If you're in Florida and places of retirement land, they're just too big of a home, But sometimes they do want to stay. So that's okay too, but you got to show them that if you don't do it my way, you ain't staying. There's no way you're staying. See, you don't have to pay off homes for people, guys. All you need to do is get them to the income of the significant other. So stop trying to pay off houses. Just teach these people that once I get you to Mr. Jones's income, you're fine. That's all we need to do. We keep the cost of this down and we get you to Mr. Jones's income. I'm sorry that we didn't start this 30 years ago, guys, but this is the way it is right now. And it's necessary to do. Now, you might want to learn how to wear people out. Continue. You're going to have some tough sales. I'm not kidding you. They can be extremely tough. And at the end of the day, it's like, I had somebody the other day who had they had $7,000 a month coming, okay? And they blow $3,000 a month of it. They just blow it on anything they want. And I told him, I said, is your wife worth $300, and this is Valentine's Day, to $500 a month? He said, yes. I said, are you okay with living on $6,500 a month? Could you two survive on that, knowing your monthly mortgage is $1,000, your car payment's $400, you only have 4 years left on that? Are you okay with living on $6,500? Yeah, we could survive. Okay, there's your answer. Now, here's what I'm going to show you, Mr. and Mrs. Jones, is that, Mr. Jones, if she were to die first, that you're going to get all the cash inside of it. Mrs. Jones, that got to make you happy knowing that you're still leaving your husband something behind.
Wouldn't you agree?
If he passes away, you get the big number. So, you know, when they see that they have to pay $300 a month for something like $25,000, they're like, oh, that's not the number I thought it would be. That's exactly what they're thinking. They thought, oh, I thought this was going to pay off the house. Because the ad's kind of stating that it kind of pays off the house, you know? I don't know if this is a lead. This doesn't tell the actual situation, but this is a lead. Anyway, long story short, get used to just getting her to the destination of his income. Because that is the most valuable point is that he can survive. Tell her a lot. He's okay. And do this. Split the playing field. Right in half. Mr. Mrs. Jones, you got $790 a month coming in. He has literally $6,000 a month coming in. And I think she had a small pension or something like that. So he had a pension. So he had a pension of $300 a month. In question, he's taking 100% of it. So I said, guys, the likelihood of you getting that 300, Mrs. Jones, he's taking 100% of it. Usually it's like he has to take 50% or a smaller portion of it for you to get the whole thing. So I make a list of things that people need to do. You need to call the pension company. You need to call the VA. Ask them if there's a life insurance policy for $10,000 because most VA vets can get a $10,000 life insurance policy. But you only want to say that after the sale because if you know they got 10 grand there, you're not going to get your sale. So after the sale, you can state that or don't state it at all, whatever. But the VA also may have an income for her. If he's on VA disability, she doesn't get squat. So remember, VA disability does not pay her squat after his death, okay? She can keep his benefits, though, for health insurance. The bottom line is that she may get the $300 up front if the pension's there. Out of this, he has like $1,300 a month of that is Social Security. So here, out of that big number, all she gets is $300 and the $1,300 a month. So she gets $1,600 a month. Right? You got to show them everything. It's math. Funny thing is, I was good at math. I knew I was good. I just hated doing it, in class. But now I'm a whiz at creating mathematical solutions for people to see what their budget's going to be, how it's going to work out for Mr. Jones, Mrs. Jones. And it just starts making sense over time as you practice it. But if I were you, I would make a list of things that you can think that people are going to want to know about. What will people want to know about? When you write it down or type it, it gets into your head. And that's what I did. So you need to start doing things to make your memory work for you. Because if you skip one of these steps, you can really lose a lot of money, guys. A lot of cash. I've been talking for a long time, so I'm going to see who's all on here right now. Hey, buddy, how you doing? David, Faith, Paula. Anybody have any questions today? Does anybody have any anything that you want to know here on Facebook that you can type in and we can review? What at the end of the day, we got big numbers, guys, that we're talking about. So let's talk about it. You know what I'm saying? Let's really discuss this. Let's make it a discussion. So for you, Thomas, you go out in the field soon, and you're preparing, you're getting ready, which is good. You're studying your products. And I wanted to show you something here, guys, which is this book is something that when I started reading this, it gave me ideas about not only my own life and how to invest, but people and what they're involved in. You know, so this is a great book to understand where people may be, but it's also a great book to teach people about things. I'm going to tell you something. I've read a lot of leadership books, and when you want to build an organization, this is one of the best books you can buy to do so. And even John Maxwell knows this guy, and he signed off on this in the forward. But those two books are fantastic. So, like I always say, and I never believed this, when I first got in this industry, I was, man, I'm just going to sell life insurance. I'm going to make all this money. These guys are making 250 grand. I watched the Boiler Room a couple times before I went in, and I'm like amped up. And then little do I know that nobody's telling me that this is an educational industry. This is a business where it never stops. Your education never stops. So you have to continue it.
Jay?
Yes.
Did you check out that Scribd, like I was telling you about, with all those? You can get all those books for like $8-9 a month.
Yeah, I did, and that's a great place for people to go. Yeah,
it's huge because they don't have to buy it; they can download a lot of that stuff. You know,
yeah, it's the perfect solution for so many, including myself. That's a great way to do it. I think that, you know, with the time that people have in a week, guys, by the way, I'd like it if you were working Monday through Saturday. Don't get me wrong. That makes me more money. But if you're working Monday through Thursday, that's okay. That leaves Friday, Saturday, and Sunday to work on your scripts, sales routines, products, and setting appointments. Now, you can set appointments when you want to, but effectively, these 2 days are really effective. We even use all 3 of these days to get Monday and Tuesday wrapped up. She might use Tuesday to get Wednesday and Thursday wrapped up too, of course. But sometimes she sets all the way out to Thursday using Saturday, or Sunday all the way out to Thursday and Wednesday. You have to lock these people in, though. Mr. Jones, I need you to grab a pen and paper. I need you to write this down. It's Jason. I'm the mortgage protection sales professional coming out. Don't say sales. I'm the mortgage protection rep coming out to give you the information. I'll be there at 1 p.m. on Tuesday. Can you write that down, please? Yes. Can you make sure that you tell your wife? Because I'm going to need her there, right? Can she be there? Yes. Okay, great. Mr. Jones, I'll see you on Tuesday at 1 p.m. Okay, buddy? Yeah, that'll be good. Okay, great. All right, Mr. Jones. So what time we say? 1 p.m. Tuesday. Embed it in there. You know what I mean? Solicit that. Make sure that you are not at a door where nobody's at. There's no reason for that, unless you're not soliciting it. Hi, this is Jason. I'm calling on behalf of ABC Mortgage. I'm here to, I'm the mortgage protection sales professional who's calling about the information that you requested. I'll be there Tuesday at 1 p.m., okay? Yes. That's a bad set. You know what I mean? You don't want to do it that way because there's nobody going to be there 9 times out of 10. Okay, so the only thing I think I got left is really the annuity side of it, which I think we should go over because it's such a big number, okay? So your average annuity size is about this. Depending on where you're set up and your interest levels, you could be earning $5,000 all the way up to $10,000 for this sale. Earn your stripes too, guys. A lot of people complain. I talked to a lot of reps. I had somebody the other day tell me, I have another company offering me 120%. You only want to give me 100% comp. I said, once you come to a realization that that's the reason they're giving you 120 is because that's all they can give you. That's it. See, I gave up points to be here at this company. I could be 10, 15, 20 points higher. I won't do that to myself knowing this industry. One, there are no doubt in my mind these are the best leads in the industry. Without a question, I've run them. This is the best in the industry. Two, the educational side of this business, Monday, Tuesday, Wednesday, Saturday, are so valuable to you. Do you realize what this does for you? You know it's there every single week, and then you know you can pick up the phone at any time, and somebody has the answer for you. somebody knows what the hell you need. And then it makes your life so much easier. I would love to have more time, and eventually I will, to spend it in the field with you guys. And that might be a couple months away, it might be a year away. I don't know. And it's up to me at this point because the income's okay. I could probably do it now, but I would love to just know that I could be able to, I might get this house thing done first and then I'll get out of the field. And the only reason I really want to do that is because I love what I do. I might still do it 2 days a week, I think, to be honest with you. But what I'd love to do is be able to get in the field with you guys, take a week out with each one of you, flying around the country, spending a week with each of you, and then really going over some of the strong points that you have and your weak points, and obviously working on your strong points. I hate working on weak points because they may always be your weak points. But if I work on your strong points and make them stronger, you're going to be one hell of a rep. But we'll work on the weak ones too and see if there's something you can boost up there. You always want to work on your weak points too. But remember, working on your strong points is a lot of times what you should do. I suck on, listen, I'm fantastic at every part of this business. What I don't like to do is obviously set appointments. Have I? Set thousands of them, okay, over the years. I've earned my stripes to get away from that part of the business. I didn't want to get away from that part of the business in the beginning of the business because I knew I'd have to train it one day. So remember, what you're doing is for somebody else's benefit later, not just your own, okay? You're not always going to be a salesman. You're going to be an agency owner one day. So you need to get that clear in your mind. Indexed annuities have no downsides. Indexed annuities have no downsides. Indexed annuities only participate in the upsides. Zero downsides and only upside potential. Now, if you add riders on and things like that, sure, it's going to eat a few points away from it. You are going to choose annuities with the average annual interest rate of 8%. Now, here's what you need to learn about that. That doesn't mean 8% a year, guys. What that means is an average annual interest rate of 8% over a 10-year period. So the jumps in the market can be in the 5th year. They could 25%. It could be 56% here. You know, doesn't mean it's 8%. It's a valuation of a 10-year look and 8% annual. However, people need protection of what? They need principal protection these days. Once they're out of the game of being matched and putting money towards these products from work, 401ks, 403bs, thrift savings, then they will need principal protection. The word protection is all you should be concerned about. And I want to give you another word to use in all sales for everybody. Options. What you're there to do is give somebody options. I sit down in a seat, I'll say, I'll sit down in a chair with Mr. and Mrs. Jones and I'll say, Mr. and Mrs. Jones, I'm here to give you your options today on your mortgage protection options at your particular age right now. So I'm not going to sell you on anything. I'm just here to tell you about things and give you these options so you're aware of what your capabilities are today financially. So let's get started. Mr. Jones, what's your age? Yeah, good question to ask. What's your age? What's the monthly mortgage? What does that cost now? And the amount owed is roughly 150 grand. Is that right? Yes. Okay. So what I want to do is do you guys have life insurance? Yes, we do. That's good. That's good to hear. Don't get afraid of that. I love hearing that when you get good at it. So either way, you're going to win. If they don't have it, they need it. If they do have it, you're going to replace it. So, okay, do you know who that's with? Or ask this question instead. Say, how much does that pay out to Mrs. Jones? So what does that give to her? I'm drawing this out. Literally, you all need to know that everything I'm talking about, I'm not just sitting there. I use 56 pieces of paper to get this done. I want you to take a note too, because you may run into young people, younger women with older men. I have a 43-year-old with a 70-year-old. He dies, she can't get his Social Security until she's age 60. Remember, they can't get Social Security until they're age 60. All right, just keep that as a note. So we have the mortgage here, $1,000 a month. Down here, all right, $150,000. Is this for 30 years? Yes, 30 years. Do you have life insurance? We'll just say no for this one. Anything else that Mary will receive? Mary, by the way, do you have any life insurance, Mary? No. Anything else you'll receive? Yes, I have VA. Is it the VA disability? Yes. So, I'm sorry, she doesn't receive disability VA. So that's an answer there. So anything else that you'll receive, like a retirement, pension, annuity, 401k or anything? I got a 401k. How much is that valued to her? What does that pay her at your death? That's worth 250 grand, worth 100 grand, whatever, you know? I'm just giving you the insights on how I'm getting this stuff out of it. And I'm writing it down while I'm doing this. So she's got $250,000. Are you using that now as an income? No, we don't touch that. Mrs. Jones, do you have anything else that you would leave behind? Do you have a 401k or pension or anything? No. You're age 65, 62. Okay. $150,000, $1,000 a month. What's the appraisal on the place? How much is this place worth? What's the appraisal? $220,000. The difference between this and this is what you need to know. So you have $150,000, $70,000 in equity. That's what you're protecting for now. Okay, Mr. Jones. Mrs. Jones is going to receive. You're going to tell him. She's going to receive your Social Security at death, just so I can balance her out on what she's going to have coming in at that time. How much will she have coming in at the time of death? She get $1,200 a month. And Mrs. Jones, just so I know, because it's going to take you 6 to 12 months to receive this in worst case scenario, and I want to know what you're going to be living on so I can do these numbers correctly. What's your Social Security, Mrs. Jones? His, hers. Mine is $1,000. Okay, the mortgage is $1,000, so we know you can't survive there. You don't have life insurance, but you do have the 401k. So in this particular strategy, I would instantly go, for me anyway, I would try to show them an illustration on this. I say, guys, you know what? I have a strategy that we use for people like you. Because the 401k is this is going to be a new piece of paper. You have your 250 grand here, right? Well, for 40 years now, this number has been doubling, and I don't know if you know this, every 10 years. And this is where it should be, and it will be, in about the 8th or 9th year, okay? And I'd like to show you proof of this. So you remember, you have all your options. And this is a perfect way to do it because it's not going to come out of your pocket. And you guys don't have much money coming in, but you're surviving on the 2 incomes somehow. And you have this $250,000 sitting, which is your bankroll. You sometimes use it, or you don't use it all the time. Well, sometimes we use it. Okay, great. And that's how you would know they're getting by, because they can't get by on that Social Security income. So we want to turn that money into this. I'll tell you what, this protects both you. It protects are there children involved too? Yes, we have 4 kids. If God forbid that both of you went together, would one of the kids take over, or would you just split it all up? Well, we would split it all up. Well, I just need you all to know that, your kids with the house, nobody receives the house. They just don't walk in here and get the home. What happens is they'll need to pay off that $150K, or they can sell it, and they just need to buy time to sell it. So they need to pay all the bills and get all your stuff out of here, paint the walls possibly, or whatever they need to do to get this house sold and get the equity out of it. At the end of the day, what we want to do is we want to make sure that they have that money, along with you guys having what? You might have 30, 40 years left on this planet, and $250,000 may not cut it, to be honest with you, between two people and inflation and tax increases. So what we want to do is we want to use this 500 grand. That's a better number, right? If I put 250,000 on the table and 500, you're obviously going to choose the 500. I just need to share with you how that option works. Do you two have a printer and a computer I can use? Yes, we do. Okay, why don't you take 5 minutes and give me some time and let me do this. I'm going to get an illustration so you have this roadmap of success to this $500,000. This way you two can discuss this and we can review it later too. Now, for you newbies out there, it's not a good idea to do this in the house immediately. The best thing to do would be to say, hey, listen, I have a great strategy that I would like to do, but I have to go back to my office to get the paperwork on it. I left it at my office, and I'd like to show you a new strategy that we have for protecting mortgages and then helping you into the future gain a lot of financial momentum. So what I'm going to do is I'm going to go back to the office, and I'm going to set another appointment with you. Is that okay with you two? Yes. This is mortgage protection, you know. So at the end of the day, you could also use the numbers too. So don't leave without showing them the real premium numbers also. So I'm going to do that also. So here's why I'm doing this, Mr. and Mrs. Jones, is because of your age and your income. I don't want to take money from you. I would just prefer to give you money, to be honest with you. So here's how this works. I'm going to do some numbers for you. If you guys want to take a break and get coffee and give me about 2 or 3 minutes, I'm going to be able to put some numbers together that make sense and fit your budget. But I do have to ask you this question. At the end of the month, when you are done paying all your bills off and you have that extra cash that you might be putting in your savings account, are you above or below $1,000 or $500 a month left over after you pay all your bills, average monthly? We have about $500 a month left over. Okay, that's great. So I'm going to be able to understand your budget. And are you putting this into savings? Yeah, so that's what we try to do. We try to save about $300 to $500 a month. Okay, well, by the way, just in case, God forbid, something happens to you tomorrow and you don't have this insurance in place, does Mrs. Jones have something in the bank account that she can run from? And don't just say yes. Now, from this point, you need to say, how much is that worth to her? Always say, what's that worth to her? How much is this worth to her? Okay? We have 30 grand in the bank. Cha-ching. So your annuity for your newbies would not be just 250,000. It would be 250,000 plus the 30. Blend the two together. So once you show the bonus on that too, since they're 65, listen, below the age of 50, I might use something without a bonus because the interest rates are they're a little bit higher that way, and there's not the 0.95% basis point. There's a basis point, they call it, in the Athene indexed annuity that charges a 0.95 basis point for the bonus, which comes out of the cash value annually, okay? So you gotta be careful about that. Learn about a basis point from the Athene annuity. Performance Pro Elite 10 and 15. Performance Pro Elite 10 and 15. So you got 30 grand here, you got 250 grand, you add them all together, boom. You put one big annuity together, 280 grand and 250 grand and 100 grand. And I'll tell you why 100,000. Now I got 3 options here. It's gonna suck to print up all this paperwork, but this is the way you gotta do it. You have $100,000, which will be $200,000, which does the job too, okay? With 10 years of payments and 10 years of earnings, the house is paid off, plus they got 200 grand extra put away, okay? So, and they're able to play in the stock market. Guys, look, Mr. and Mrs. Jones, when you get these on the table, what I'm trying to avoid for you is this, okay? You're looking for these upsides, but you have to participate in these downsides. Plus you have a stockbroker fees, stock brokerage fees, that God knows what they are. Oh, they're only 1%. Well, that's maybe for him, but what else is going on behind the scenes? There is no stockbroker on earth that just charges 1%. You know, 9 times out of 10, there's maneuverability inside here that's going on, that there's all kinds of fees most of the time that they don't see. So you want to let them know we're trying to avoid the fees and put that 1% to 3% back in your pocket. So there are no downsides to this. You only participate in the upsides. So God forbid that 5 years down the line, every financial structure in the world shut down. We're at World War III. It's not going to matter anyway, but you're at 150,000 based upon that 100 grand. It just stops there. Once the world comes back to order, you just start coming up the rise again. And that's it. You need to strongly emphasize this. Mr. and Mrs. Jones, you need to protect your money. You need to protect your principal. Do not lose it to the stock crash that's coming. Guys, it's coming soon. You all need to get out there and start protecting people at the highest level at this point. This stock market crash is coming, and it's going to eliminate everybody. They're all going to be wishing that they had you sitting in front of them. Remember who your annuity clients are that said no. When the stock market crash comes, you can send them out a letter and send them out a sheet of paper that shows the cash value of where they would be now with you if they didn't stay in the stock market. That'll hurt, but that's the facts. And tell them, remember, with the bonus, we might be able to get you back to your starting point. All right? So good stuff. Did I miss anything? I don't think I missed anything. Well, closing up the sale. So anyway, we'll get back to the sale. That was the sale. We got back. You know, Mrs. Jones needs protected. Now we have $100, $200, and $300 out of the $500 they use. They're putting it into savings anyway. So you're just showing them how to save money, earning some interest. Use Foresters, you got 4 to 6%. Use Mutual Omaha, you got 3%. Any way you look at it, it's got cash value to it, so it's safe for him. She dies, explain this. If she dies first, Mr. Jones, you're going to just pull the cash out of this. Okay, it's cash earning. That means when you're making your premium payments, it's actually going into a savings account where they use the premium payments, they make some money, and then they give you a return on it. Okay, your return is about 3% here annually. All right, so it's a good product for you. Plus, you have living benefits, cancer, heart attack, a stroke. If you get any of those, this money is yours while you two are still alive together. God forbid this happen, but it's good news that you have it while you're alive. So you have $100 a month going into this one. This is $50,000. Let's say this is 25 grand. It probably is. This is 50, and this is 75. Now, Mrs. Jones, would you stay in this house? No, I'm just going to sell it for the equity. I'm moving back with my kids. They say that, 25 will work. Just walk her out the door, okay? They still have $400. You're going to want to show them what they have left. You still have $400 a month that you can still put into your savings account, okay? Plus you're saving money here, plus you're saving money in the house. So you have 3 strategies of saving money. You're guaranteed that $25,000, whether you two are alive, he's dead or she's dead. Nobody loses. Okay, everybody wins here, guys. You got $200 a month going towards 50 G's and 75. And the reason I chose these 3 numbers is because I wanted to leave some money for you to save in the bank account. And then thirdly, I wanted to also tell you, it probably isn't going to happen anytime soon. It's probably going to be the halfway mark. 9 times out of 10 in my 10-year experience, it's the halfway mark. So the halfway mark will release $75,000 you pay off the house. Guys, mute your phones. All right, 75 grand is owed halfway, all right? So in 15 years, how old will he be? 65? He'll be about 80 years of age. Most men die between 85 and 95, guys. That's it. Mrs. Jones, you get the house paid for. If you don't want to stay, you walk away with not only that, but the equity built up in the house. And if you both die together, the kids have enough to survive inflational times, tax increases, and whatever else. So that's a great way. So that's that. And then remember, I told you that I wanted to see, I already set the appointment for the annuity and presented them with this. So you can go back and get an illustration for these 2 and show them the other one. But if you show them this, sometimes there's a chance they might not want you back for the second one because they made a decision on this and they don't understand the second part. So that's why I present them both at the same time. If you sell the deal, which is good news, sell this deal first and don't talk about the annuity at all. Sell the deal, then say, when the policy is delivered, I'm going to deliver the policy, right? You'll deliver the policy. And at that point, you'll bring the annuity with you. They won't even know that you know that they have 250 grand plus 30 grand in the bank. So you're just going to bring it back with you when you deliver the policy. That's for newbies. You should do it that way. Even reps, veteran reps, it's still a good strategy. So you might have another appointment where you can't talk about the annuity, but once you get to a point where you guys are able to get, like a lot of you may be married, have boyfriends, girlfriends, doing something else, God knows what, and they don't believe in this business yet. So go out there and prove it to them first. Prove them you can make $10,000 a week, a month, whatever. But tell them this: I earn $10,000 a month for the past 6 months now. Do you know what I could do if you were helping my ass out? Could you imagine what my capabilities would be if you were involved with this? And the numbers will double. Period. The industry and its leaders are really based upon couples and people that know how to delegate work out. I've never, ever, ever, ever met anybody at the top who didn't have a wife or girlfriend involved, or even mother. I've seen men have mothers involved and girlfriends, family members, boom, boom, boom. So, all right, do you have any questions, anybody? No time.
Oh, that was great, Jason. I was going to ask you about the annuities, and then you went right into it, so that was awesome.
Okay, great. And anybody else, any questions? Let me see if there's any questions here. On here, if you're new here and you're on the webinar, just text join to 352-255-2594, and we'll talk about, I want to talk real quickly about these leads. Do you understand?
Jason, could you hear me? Hello? You locked up, buddy, if you can hear me.